Welcome back, everyone, to the daily real estate and mortgage news podcast. So, today, Wednesday, May 21, 2025, I'm Leo Lustig, your guide to what's moving the real estate market, the economy, and financing trends today. So, let's dive into your updates. So, first of all, your mortgage rates updates for today: 30 years fixed mortgages are kind of like stuck in the spot 6.96%. It is up 8 basis points from last week. 15 years fixed mortgage rates is at 5.92%, a slight increase from 5.89% of last week. DSCR loans, we see rates between 6.5% and 8.5%, depending on the borrower profile and property location. As for economy and the tariff news, Trump maintains 30% tariffs on China. Analysts predict these tariffs will remain in place through late 2025, potentially impacting global trade dynamics. Housing starts rose to a seasonally adjusted annual rate of 1.361 million in April, a 1.6% increase from March. However, building permits fell 4.7% to 1.412 million, indicating cautious builder sentiment. In the spotlight, today we are going to talk about how come foreign nationals can sometimes get approval faster than Americans. So why might a foreign national with no US credit score get approved faster than an American with a low score? So let's break it down. DSCR loans are asset based, not credit based. Foreign nationals often have strong global income, large down payments, and good liquidity. Meanwhile, Americans with low credit scores are penalized harshly under standard underwriting. Ironically, it's easier to qualify with no score than with a bad one. So we are going to jump into it today. Other than that, the stock market news: the S&P 500 closed at 5,940 on May 20, snapping a six-session winning streak as investor sentiment edged lower. The crypto market today, the Bitcoin surged all the way to 107,000, nearing its all-time high, driven by strong ETF inflows and futures premium. Ethereum is trading around 2,542 after failing to break above the 2,588 intraday high, indicating a potential pause in bullish momentum. All right, so if you don't know who we are one of the largest mortgage brokers in the US. We work with more than 3,000 lenders. We're doing basically an auction between thousands of lenders to get you the best possible rates for your investors' loans. You can see all of our endless amount of reviews. You're more than welcome to join our channel where we getting you daily updates about real estate and mortgages in the US. So let's jump to see the economic data of today. So as mentioned, the S&P went down 0.39%, the Nasdaq 0.38%. So we can see that the VIX rose by 3.54%. The gold is heading higher. Investors are looking to hedge. We can see that part of the tariff war, importers race to turn US warehouses into tariff-free zones. And we can see this morning that the Asian shares climb and oil prices gain after a report Israel may attack Iran's nuclear facilities. Again, as for the mortgage rates, we can see that the 30 years rate is hovering around 6.81%. And of course, we can see that the median sales price of household is kind of flat. The US Treasuries for 5 years are adding up by 0.032%. We can see that we've been in the deep in April, 30th of April, and we corrected a bit. The futures are lowering down. We can see 0.6% down on the Nasdaq futures and the S&P futures 0.51%. S&P 500 futures are little change after benchmark snaps 6-day win streak. All right. And again, you're welcome to join our Facebook group where we have thousands of people joining daily updates. We can look at the mortgage-backed securities. We can see that the 5 years is heading down by 0.01%. The treasuries, the 5-year going up 0.006%. Again, today rates updates. And we can look the 2-day charge of the 5 years treasury adding up 0.027%. Let's hear the rate index. And what's up with the budget bill update?
Welcome back. The president speaking with House GOP members this morning about the budget bill, telling representatives he's tired of so-called grandstanding and not to mess with Medicaid. Joining us this morning is Tobin Marcus, Wolf Research Head of U.S. Policy and Politics. Tobin, it's good to have you. As we watch some of this sausage get ground, you do think this ends up happening, although not easily, right?
I do. I think that they have to succeed, and so they will ultimately succeed in getting this bill done. We've been expecting July as the likely time frame for final enactment of the bill, ahead of the twin deadlines of the long August recess, and even more importantly, the debt ceiling X date, which will probably fall sometime in August. That's a really immovable deadline that they're in a very, very tough spot if they can't get this done in advance of it. But I think between here and there, we've still got about 10 weeks, and I think there are going to be some twists and turns.
What's your thinking now, given some of the long-term debt concerns versus policy that's going to be somewhat stimulative to the economy?
Yeah, so this bill in our reckoning looks like it is expansionary over the next few years. Not so much this year, but in 2026, those numbers get pretty material, a little over 80 basis points of GDP. And over the long term, if you fully extend the expiring provisions in this bill, which I think is a reasonable expectation, it's about $3.7 trillion in addition to the deficit relative to current law. That, I think, is well within the range of expectations for what the cost of this bill would be coming into this year. But I do think that markets are starting to tune into that now. So, I think it's a story about upward pressure on the long end of the yield curve, about term premia. I don't think it's big enough to kind of tip us into some acute bond vigilante crisis. But the fiscal situation is bad and getting worse, and we're seeing that in the long end of the curve.
Yeah, it's certainly paying attention to it more. Moody's warning only sort of reinforcing that. The fact that the headline from the president is "Don't F around with Medicaid," is this finally going to quiet all the Democrats that have been fear-mongering about Republicans and the president wanting to cut Medicaid and your health care?
Well, so the bill does have about $715 billion of Medicaid cuts in it right now. I think the president's message in this meeting was to tell the conservative hardliners not to push for further cuts to Medicaid, where they had been pushing to accelerate the work requirements in the bill, to add in some cuts to the funding for the ACA expansion population. So even if you freeze it as it currently exists, there's a quite substantial amount of Medicaid savings they built into the bill that some senators on the Republican side, like Josh Hawley, have raised concerns about. So, the Democratic ads write themselves. They have a lot of muscle memory about running against healthcare cuts. I think they were planning to do that regardless of what the bill looked like, but they certainly do have a target there.
Yeah, we're going to.
All right. So this is about the big, beautiful bill from Donald Trump and passing it without cutting into the Medicaid. So basically, as for today's market summary, ultimately it's sort of flat if you use your imagination. market movement recap. Modestly weaker overnight with additional selling in the first 2 hours. The MBS down by five ticks. Let's look at the economic calendar for today. We have the MBA refi index and the MBA purchase index, crude oil inventory, Fed barking speech, and the 20-year bond auction. Let's look at the fear and greed. As for today, we are still at grid 69. Do you remember we just been at free just like a month and a half ago? So some uncertainty at the end of an otherwise decent week. So we did see a streak in the stock market for 6 days. 1 year inflation expectation from consumer sentiment survey. So you can see the expectation roaring. The 10-year treasury yield. So this is the Moody's downgrade that we saw. We can see a jump up in the 10 years treasury. And of course, the goal of the Fed is to control the inflation, which currently is at 2.3%, unemployment rate 4.2% in April 2025, and gross domestic product, we can see it's currently negative at 1.0.3%. The next Fed decision is in 28 days, and we can look at the probabilities of a rate discount. So basically, we can see that in September, we are currently at 51% to lower by 0.25%. And before we jump into today's topic, we remind you that you're more than welcome to join our community. You're getting daily updates about mortgages in the US, about real estate, about each one of the 50 states. You get daily updates of statistics. Case study, loan 1367, refinance with cash out, Indiana, Elad and Guy. Why reusing appraisals can show slow down instead of speeding up. We've been looking at this test case. So this is how it looks like on the social platform. You can see the daily updates and articles. We're almost reaching 23,000 members. You can get access to our courses, of course, daily news and articles, hundreds of groups. These are all of our members. And also updates daily about stocks and crypto. And you can see the list of experts on the platform. Whoever doesn't know, we're also doing the largest real estate conventions every year, Nadlan Expo. We are also one of the largest real estate schools for wholesaling. And we have a website, Nadlan Deals, with off-market deals coming to it daily. And we're also building in Florida and in Texas. All right, so let's jump into today's topic. Everything you need to know about real estate financing. So we did a webinar. So I'm just going to give a brief here. The webinar was like 2 hours. Okay. So basically for real estate financing, you can basically lower your risk by having the bank lend the majority of the funds for your purchase. So with conventional loans for an American, you need to come with 3 years taxes, 2 years W-2s, with credit, and you need to show your income, and then you're being approved. With commercial loans that we do, it's actually asset-based, and you can be with no income and even no credit. Financing options for foreign nationals. So foreign investor programs, specialized financing programs that consider property income potential. We specialize in DSCR loans, debt service coverage ratio. Basically, it's calculated by the NOI, net operating income. We deduct from it the management and the maintenance, and we divide it by the PITIA, Principal Interest Taxes Insurance Association. And of course, we also specialize in bridge and hard money for loans that needs renovation, for properties that need renovation. So basically, building a strong borrower profile, it's a very major part of when we apply for a loan. Basically, the lenders rank you from 0 to 10. And what we do, we're building your business profile and your resume, so you will be able to get the best possible rates and offers. All right. So we are going to work on your business structure, on all of the documentation, the LLC, the property management questionnaire, bank statements, banking relationships, and the cash flow of the property. All right, so let's look at the closing process, how it is explained. So first of all, we have the loan application. After we are done with the auction, we chose the lender. We get the LOI, letter of intent, and then we fill up the loan application. After that, we have all of the stages of doing the appraisal and the underwriting, escrow and the title, closing the loan, and the closing. Okay, so if we are comparing financing offers, conventional, today we should see something around 6.86, down payment 20 to 25%. DSCR, the down payment is a bit higher, 20 to 30%. Rates are also a bit higher, even though we closed 5.69 for a client. So it really depends. Fix and flip rates again are higher at 9 to 12, and commercial loans 7 to 9. All right, so creative financing strategies. We're not going to go too deep into it now, but basically we can do cash out refinancing, seller financing, lease options, and partnerships. Beyond traditional financing, creative strategies can help foreign investors enter the US market with minimal upfront capital. For investors without US credit history, these alternative methods can provide pathways to property ownership. And we have some market update. We saw that the Bitcoin just now jumped to around 107, 108. Okay. The S&P rebounded 18%, and these are the rates. And as mentioned, daily you can see all of the latest updates about crypto and stocks in our social network, the Nadlan social network. Stocks are making the biggest moves midday. We had a tremendous amount of buyers: United Healthcare Group, Tesla, Alibaba, and more. Stock on the move, pre-market highlights. And we also have the pre-market trade plan, Palantir, and so on. You're welcome to come to our site and go through it. And now we're going to jump into economic and financial updates for foreign real estate investors. Okay, so creative financing options. Of course, you have seller financing, lease options, partnership models, and private lending. So legal and taxation consideration. Double taxation treaties, agreement to avoid taxation overlap, 1031 exchange, requires proper structuring for foreigners, entity setup, optimizes taxes and limits liability, and withholding tax applies to rental income and capital gains. So, what are the frequently asked questions from foreign investors? The US credit score requirement. You can get loans without a US credit score through DSCR or foreign national programs. Remote closing options. So we have title. So closing remotely without an apostille. It's really basic. It's got to do with the state, with the title, and the lender. All of the banking solution, RealFi, Mercury, Wise, which ones are good and which ones are not. We have tons of articles in our social network that you can go and take a look under the financing chat group and income verification. Final thoughts: understand economic realities, align investment strategies with current US economic conditions, use DSCR to leverage your loans. And again, this is how our social network looks like. This is one of like 300 groups. You can go to discussion and you can see, for example, today we added an article. If you can get loans with ESTA compared to a Visa, why it matters for DSCR loans, 50 years and 30 years mortgages, protecting it against mortgage fraud, and so on. And the Fed's tough spot, what you should expect from May FOMC meeting.
Deep dive. Today, we're digging into the Federal Reserve's recent FOMC meeting back in May 2025.
That's right. We'll be using insights mainly from the Nadlan Capital Group and also touching on a CNBC video that frames the Fed's dilemma quite well.
Exactly. And our mission here really is to understand what the Fed's latest stance means for, well, things that affect many of us mortgage rates, the U.S. real estate scene.
And ultimately, what it means for your financial planning, especially if you're eyeing U.S. property investments.
So let's get into it.
Okay, so the first thing that really jumps out is this balancing act the Fed is constantly performing.
Right.
Nadlan Capital Group points this out clearly. The huge challenge of tackling inflation without, accidentally causing a recession.
It's a tightrope walk, isn't it? And it feels even more complicated now.
It really does.
Because it's not just the usual suspects like inflation numbers or job figures. Nadlin also flags these renewed global trade tensions, new tariffs being talked about.
Yeah, those add another layer of complexity to the Fed's decision-making calculus. It's definitely not straightforward.
So when you look at the actual data, it seems like the path isn't clear for the Fed to just start cutting rates, is it?
Not really, no. Inflation is proving quite sticky, as Nadlan calls it.
Sticky inflation, meaning prices, especially in services, aren't coming down as fast as hoped.
Exactly. Services inflation tends to hang around longer.
Mm.
And then you have this strong job market.
Which is good news generally, but it means the Fed doesn't feel pressure to cut rates to boost the economy.
Precisely. So those hopes for rate cuts happening soon, they faded quite a bit.
Okay, so that leads directly to mortgage rates. The big question for homebuyers and investors, it sounds like the most likely outcome is rates staying, well, elevated around where they are now for longer.
That's the general expectation, yeah. With the Fed likely holding its benchmark rate steady, that's the main rate influencing borrowing costs, there isn't much pushing mortgage rates down immediately.
But wasn't there a little blip recently? Something about the bond market.
Ah, yes. Good point. The Nadlan discussion mentioned that. There was a strong 10-year Treasury auction,
Okay.
and the high demand actually caused yields on those treasuries to dip a little, which in turn led some lenders to slightly lower their mortgage rates.
So that shows the direct link, right, between government bonds, U.S. treasuries, and what happens with mortgages.
Absolutely. Mortgage rates and mortgage-backed securities are closely tied to treasury yields. When Treasury demand is strong, yields can fall, and that can filter through to mortgages.
Like a ripple effect.
Exactly. But it's important to remember, these kinds of midday or short-term mortgage rate changes usually only happen if there's a really significant move in the underlying bond market.
So while a good auction is a positive sign, it's not the whole story.
Not at all. The bigger picture, the main driver for mortgage rate trends is still going to be the fundamental economic data, inflation reports, job numbers, fiscal
Mhm.
policy, that sort of thing.
Got it. So, with all this uncertainty about what the Fed will do next, how does that play out for investors? For the real estate market itself? Sounds a bit volatile.
Volatile is a good word, or at least uncertain. Markets generally don't like uncertainty, whether it's stocks or housing.
Right.
When the path of monetary policy isn't clear, you can definitely see more ups and downs.
So, patience is key right now.
That's what Nadlan Capital Group seems to suggest. A patient, strategic approach, especially if you're making good decisions around real estate.
Okay, let's talk about the Fed's message itself from that May meeting. No rate cut was expected, but everyone was listening for clues, right?
Exactly. The focus wasn't on the decision itself, keeping rates steady was pretty much baked in.
So, what were people looking for? The tone.
Yes, primarily the tone of Fed Chair Powell's press conference, the specific language used.
Trying to read the tea leaves about future cuts.
Pretty much.
Hmm.
Investors, analysts, everyone is parsing his words, trying to gauge how likely rate cuts are later this year.
Or maybe not until 2026. Nadlin mentioned that possibility.
That's definitely on the table now. The idea that cuts might get pushed further out is gaining traction.
So it feels like we're still in this wait and see mode, probably through the summer.
That seems to be the overall outlook, yes. Just watching the data roll in, trying to figure out the Fed's next step.
But even with this uncertainty, Nadlan Capital Group is highlighting actual opportunities, right? Particularly in financing U.S. real estate.
Yes, and this is where it gets quite practical, especially for anyone listening who's considering a U.S. property investment.
They act as advisors, connecting people with financing, both for U.S. residents and foreign nationals.
Correct. They offer advisory and referral services covering a really wide range of loan types.
Like what specifically?
Well, standard purchase loans, refinancing, but also financing for new construction, fix and flips, bridge loans.
So short-term stuff too.
Yeah, and even multifamily properties.
Yeah.
And interestingly, short-term rentals like Airbnb properties.
Okay. And they mentioned helping people without a U.S. credit score or social security number. That seems huge for international investors.
It really is. That can be a major hurdle, and they explicitly state they can assist with that.
And they're not just talking theory, they gave specific examples, particularly in Florida.
Right. They mentioned new builds in places like Cape Coral starting at pretty accessible price points, around $225,000 for a 3-bed, 2-bath, some with boat parking.
They also flagged a premium model in Central Florida.
Yes, about 2 hours from Miami. They listed it at a wholesale price of $225,000, suggesting it has a market value significantly higher, around $272,000 due to high-end finishes.
That's quite specific.
It gives potential investors something concrete to look at. They also mentioned higher-end new construction in Cape Coral, around $650,000.
And it wasn't just single family homes, right? Multifamily too.
Multifamily, new construction projects in various hot U.S. markets, and even a luxury apartment tower in Brickell, Miami.
The Miami one allows legal short-term rentals.
Apparently so, which is a big draw for certain investment strategies.
Beyond the financing itself, Nadlin seems to offer other services useful for foreign buyers.
Yes, things like help with opening U.S. bank accounts, setting up U.S. companies, and even currency exchange services, sort of a one-stop shop approach for international investors.
Makes sense. Trying to streamline a complex process.
Definitely.
And how do they help people get good loan terms? They mentioned an auction system.
Yeah, a mortgage auction system. The idea is to have lenders compete for the client's business.
Puts the borrower in a stronger position, potentially.
Exactly. Competition can drive down rates and improve terms.
Okay, so let's try to wrap this up. The big picture. The Fed is cautious, likely holding rates steady for a while because inflation isn't quite beaten and the job market's still strong.
Right. Which means mortgage rates probably stay elevated, adding some uncertainty to the real estate market.
But for investors, especially those from overseas, groups like Nadlan Capital are providing pathways. They're helping with financing, even without U.S. credit.
And pointing to specific opportunities, particularly in new construction and short-term rentals, like we saw in those Florida examples.
So despite the Fed's holding pattern, there's still activity and opportunity in the market.
There certainly seems to be. Which leads us to maybe a final thought for you, our listener, to chew on.
Okay.
Well, given the Fed's careful stance, and we know how dynamic real estate is, how might other global economic factors, maybe beyond just the trade stuff, complicate things further in the next year?
Good question. Like what kind of factors?
Could be anything, really. Shifts in global capital flows, unexpected geopolitical events. And are there maybe some overlooked indicators out there, things beyond the usual inflation and jobs data?
Indicators that might signal a change in Fed thinking or maybe point to completely new kinds of property opportunities?
Exactly. What are those less obvious signals we should perhaps be watching? Something to definitely think about.
All right. Okay. So after hearing about what the Fed is most likely will do, in our social network, you can jump into each one of the groups and basically get daily updates. For example, this is the Ohio group. You can see that we are having daily updates and statistics. For example, for Ohio real estate, why investors are turning to DSCR loans. You can see here specific updates, trends, data, year over year, home prices growth. You can see all of this in the social network on our site and the app. You can see all of the groups that you can connect. And our property market sees surge in DSCR-backed purchases. Let's take a quick look at the Ohio market. This is one of the software that premium members can use for free. All right, so you can see that the market is strong, prices are stable. 50 means it's right stable, right? Now we can take a look, for example, at price cuts. You can see that price cuts went up to 20.9%. Days on market year over year are kind of flat, 37 and 37, which is a strong indicator. Median listing price went down by 1.39%, about $4,000 in that example. And of course, the new listing count that basically went up by 10.2%. All right, guys. All right, so hopefully you got some value from today update. You're more than welcome to go to our website and join our social network with the special pricing we have now that are going to go up. And that's it. So today we saw that actually a foreign national can get approved even faster than an American, especially in case of low credit. It's better to be a foreign national with no credit and enjoy the doubt of being good than being an American with bad credit. So thank you everyone for joining, and we'll see you in the next time.